Hi everyone, it's Rob again from StockTraders.net. Today we'll be reviewing one of our trading strategies we call Gap to Close, or G2C. This is a very simple, highly efficient, and successful strategy. It probably happens around 5 times per day. It's both a long and short strategy. Finding these setups is the hardest part of the strategy. The closing price and the high and low of the day are extremely important areas, especially when they are near each other. When we have a stock that gaps in price to a certain point based on our guidelines, which I'm showing now, with the retracement back to the previous closing price, we assign extra significance to this G2C strategy. Let's review. On the chart, we are looking at Manpower, MAN. This stock is roughly $100. So the guidelines indicate for a stock over $70, we're looking for an initial gap from the previous closing price of $1.50. Manpower meets this criteria. So since it's now in our purview, we're watching the retracement to come within 50 cents of the previous closing price to begin our monitoring for an entry. Let's review Manpower. On this chart, Manpower closed near 103.30. You'll see that Manpower opened this day at almost $100 even and proceeded to gap significantly lower to under $98. However, the price started to retrace, and at 102.80 we would begin to monitor this stock for a short, given the price decline and the price retracement back to the previous day's close. So we would have entered this stock near 103.30. And where would our targets have been? Let's draw some fibs. Here we go. We draw the fib from the high of the day at that time, from here to the low of the day. And our fib, 50% fib, for this strategy we're always looking to obtain the 50% fib of the move, and that fib is sitting at $100.66. And as Titus always recommends, place your covers just above that 50% fib, possibly near 100.70 or even 100.75. And clearly this trade would have been covered at that price. Let's move on. Looking at this chart of APFH, you'll notice the previous day's closing price is $33.94. Going back to the guidelines, we see that we are looking for approximately a $1 gap. So let's look at the chart. This stock opened at $34.60, but notice right out of the open it gapped up to $35.60. So there it meets the criteria for our G2C trade. Once the retracement back to closing price begins, we are looking to be alerted and begin monitoring this for an active trade at a 40 cents difference from closing price, roughly $34.40. We would begin monitoring this and place our bids for a long trade here, just around $33.95. Our target, let's draw it. Back to the fibs. From the high to the low, our 50% fib is sitting at $34.76. Coincidentally, at this time, right near VWAP. So we would be selling this position near $34.70, always inside the 50% fib, a few pennies. One thing I do want to mention on the G2C strategy, we go in with our whole position first. Let's look at one other candidate that we actually traded today. Kimberly-Clark, KMB. For those of you who were in the room and saw Titus take this trade, this was the setup that was engaged. Kimberly-Clark closed the previous day at 129.96. It opened today at 127.49 and made a low at 127.18. So once again, our guidelines were met for this trade. We would monitor based on our guidelines of a 50 cent alert. We would begin monitoring this near 129.50 for an active short. We did in fact take this short near 129.90. And where was our covers? Back to the fibs. At this time, this was the high and this was the low. So you'll see the 50% fib is sitting just about 128.70. I know Titus covered a portion right near VWAP at 129 even, and our last portion was covered near 128.70, right on top of the 50% fib. We always watch news, price, and volume when we're in an active trade. And these are the criterias for the gap to close strategy. Thank you.